So this is gonna be the recap for the last week, and as you can see, week started pretty bad. I was using a 30-point stop, so lost the pound Aussie dollar trade, lost several trades on the Monday the 11th. On the Tuesday, I had some of the most, I had two of the most successful trades I've had so far. 209 points on the pound yen, and also on US dollar, Japanese yen. All these trades are these two trades are pretty much fundamental. So in Japan, Japanese government officials, or pretty much Bank of Japan, BOJ, pretty much intimated to more easing. So Abe government, central bank, more easing. So as you'd expect, the yen to weaken. With the interest rate decision coming later on in the week on the pound was strengthening somewhat, also due to the fact that Prime Minister David Cameron was stepping down, and now former Home Secretary Theresa May was coming in, so greater stability within the UK was strengthening the pound. So yeah, those trades pretty much came off pretty good. Now after that, these were trades I put on overnight and during the Asian session. From what I've been looking at, it seems like my most successful trading session seems to be the Asian session. The thing is, I'm not awake, so what I simply do is I put the trades on based on the information I have available to me at the time. I pretty much go to sleep, wake up, and more often than not, the trades are successful, I think, in a way, because I'm not watching the charts. I pretty much leave the trades. I can't interfere with them as I sleep. They seem to work out, so those trades, the thing is, the broker didn't close me out when I clicked close, so I lost a couple of points there. The only thing is, as well, I went back into the market and I lost two trades there. Now the Australian dollar, US dollar, that was an interesting one. I went back in the market after going short, and I thought, well, there is some more room for this market to go down. It wasn't the best decision, not much analysis. I pretty much went into the market pretty much at the bottom as the market was about to reverse. I was in the market reverse, but I decided, nope, I will not be taking a long, as there was what I would probably, I'd call it a kill zone. So I'm just going to go on trading view just to show you the chart. So if I go on to Aussie dollar Japanese, honestly, come on. So let's get a chart up. Honestly, the thing is, the Australian dollar, US dollar is not a currency I trade often, you see. So I'll just simply get a new chart. The thing about TradingView is it pretty much saves all your drawings. So RDUSD and some 15-minute time frame. Well, if I was to go inside the 3, I'll just show you the zone where I decided that to buy there would not be the best move. So we're looking at somewhere around about the 76.30 to 76.60. So in and around that zone there. I'm not interested in taking any trades at all, because this was the thing is, I actually recognize the actual candle, 13th. So if I go back, there we are, 13th. I actually recognize the candle because I got in down, where was it, 80. I got in there, so pretty much the market went down just a bit and pretty much rallied back up, and I pretty much closed the position. Up here I wasn't interested in taking any long positions, because if you look to the left of the chart, as you can see, massive wick. So around about 76.50 level, got big sellers. As we've seen, the markets came up there and stalled again later on. So around that 76 level again, we've got wicks all the way over here. Was that 29 for the 4th? Again over here, we've had it it's been used as support there. The market's bounced off it, so pretty much wasn't interested in taking any long. So I started the day up pretty much 90, well, it's pretty close to 90 points, and I lost half of them on pretty much on these two trades. Now the Euro Yen trade, that was a trade I took based on poor industrial production numbers coming out of Europe. I expected a bit more of a pullback on the yen, as it weakened quite a lot over the preceding sessions from the 11th. So I thought, well, maybe, in all likelihood, the euro would fall against the yen. Unfortunately for myself, it did not. Now if I, so the primary time frame here is a 15 minutes, so hopefully the drawing is still on there. It should be. Oh, there we are. Here we are. So, I entered a trade after seeing a notification about the industrial production numbers. Now, I was looking primarily on the 15-minute time frame, something you should never do really. Again, you want to incorporate multiple time frames into trading. So I looked at what happened preceding it. I looked at the market's come down. Even though it's rallied up quite a bit, the market was on its way down. Bad news against the euro. So I expected the market to fall even further. Now, I didn't draw on these trend lines at the time, but I was aware of the contraction of prices. I was seeing that we had increasingly higher lows, and we had this trend line coming down here, so the market was going lower highs. Now, what was a concern to me before entering the trade was this big candle here, because I saw the market broke down beneath where these were trending. I didn't draw a trend line, like I said, but it bounced back, so it seemed like it was a false break. I saw this big candle here, which was a bit of a red flag, but I thought, well, we have descending resistance at the top here, plus we have bad news, so I expected to break back out of the support, but it did not. I got in on the trade at 115, about 115.20, so pretty close, about, give or take, well, because of spread, so more often than not, I think it's a 3-point spread, so about 23, but I mean about 20. Now, as we see, the market is struggling, not going down, I thought strange, but in fact I was actually caught in a breakout, so the market immediately broke to the upside, and I suffered a point loss of 29, I'll call it 30 points. 30 points on that breakout there to the upside. Now, if I'd incorporated multiple time frames in to my actual trading, what I would have saw would have been this here. So I'm just going to zoom in, and as we've seen, bear in mind I took it over here at this candle at 10 a.m. which so we've seen the market come down, bounce up to 115 level again and again, 3 times right there off that level after coming down. So in all likelihood, in the context of this move here, you could argue that it would likely either be a contraction of the candles getting smaller. It would likely be either a pullback or it continues to sell off, but the rejections off the 115 level suggest like some sort, it's going to be support. So I should have been aware of the danger of possible trade. So on the breakout, lost there. Now, I'll go to the 14th, which was a pretty bad day overall, as you can see there. There's no points lost. So there was a long Euro GBP, and the pound was strengthening quite a bit, so pretty much lost that trade. Now this pound position here, to short the pound, because essentially this long Euro is a short pound position, so lost there. This short pound again, lost there as well. This long Euro is again a short pound position, lost there. But this long pound position was profitable. I closed this short Euro position pretty early. UK 100, I don't think I'll be trading this going forward until I got a pretty secure strategy, because I've had a look at my success, and while on one occasion I managed to make 80 points, all subsequent trades have been losers or very small winners. So there kind of is no point persisting with an asset which is not profitable. Now, so let's have a look back at this. Now, this pound trade here, 128 points, and this 187 points. Now, it's somewhat deceptive. This long trade was a hedge on this short trade. Now, I entered the short trade initially because I thought, well, with the interest rate decision coming up, the market's expecting the pound, well, expecting more stimulus. Consensus was for cutting interest rates from the Bank of England. So I kind of expected market sentiment to send the pound downwards. But, as pretty much, from financial markets, nothing's guaranteed. So the pound started to strengthen. So at about 50 points, I decided to put on a long position as a hedge for the short position. And what I was hoping to do was unwind both positions, one at break even, one at profit. Now, after seeing the pound position continue to strengthen, I then entered another long on the pound yen to mitigate further upside momentum and keep the short running, because I expected the consensus to be correct and for Bank of England to weaken the pound by adding more stimulus and reducing interest rates. Now, as the market continued to go up and up and up, and while this position was hedged, I was somewhat concerned, so I closed this position, and this is where my psychology comes into play. Now, I was willing to let this position run, but then I thought, well, this was pretty late in the morning, actually. It's pretty probably near midway through the Asian session, I thought, well, I'm going to sleep, and for all I know, what could happen is this could reverse and be a greater loss. Now, I closed this position. I also closed this position on based on after I saw some retracement on the pound yen. I thought, well, maybe it'll retrace all the way, so just better secure these profits here. Now, at the time, I did see, before this loss extended even further and this hedge edged even further, I did see what would have been a bullish reversal pattern, but I did not take it. Now, it was more says more about my psychology and the confidence in my analysis, but I'll just show you. It was on the 1 hour chart. Yeah, might as well go back to the primary. So if I go into the 1 hour chart and I zoom out, gonna be too far there. So I don't think it was that one. This one here. This here. So take off the auto. This pretty much here. Now I saw this is what I saw at the time. This was bearing in mind my short position. I saw these two candles here and I thought, well, this does appear to be a bullish reversal pattern. This candle would be confirmation. Now I did think that at the back of my mind, but for some reason I didn't act upon it. So this is the 12, this is the 1, this is 2 o'clock. Now I'm getting pretty close to going to bed at this time, so I decided, well, I'll close all these positions, and I was looking at a 15-minute chart at the time. I had a 1 hour as a secondary chart, but I closed the position, but I saw this, and it did appear to be a bullish reversal pattern. I didn't take the pattern, but, and I'll just show you, as you can see, the market did go up a fair bit. So, say I did take that position, let's see where we would have gone after the confirmation candle. The market went up a further, well, if we use the long week of this candle here, it went up pretty much 300 points. But say a very conservative, you would probably say, conservative, say the close of that candle, you're looking at 200 points there. Say you're brave enough to take it close to the Bank of England announcement, again, you're looking at 250 points easily. Now, as we can see here, this is the Bank of England announcement, and yep, they didn't reduce interest rates, didn't add more stimulus, pretty much a wait and see stance, and yeah, the pound went up. Obviously you're going to pull back when you have a big massive move on a interest rate decision before a continuation to the upside. Now I'm going to show you another trade I've taken on the pound. So that was a hedged position. I went pound yen long, pretty straightforward on that position. UK 100 lost that position. A pound yen long again. I also lost this position as well. These positions were taken in and around after the this was using a 15-minute chart as well. So let's have a look at a 15-minute. Matter of fact, I think I used a lower time frame. Did I use a lower time frame? Pretty sure I did. Jesus Christ. Pound's gapped up. Yeah, it's probably going to come back down to fill that gap. So yeah, I took a few trades in and around this area and lost them by simply not waiting for the retracement. So I went in on the pound yen again, won a few of those trades, and near the end of the day I took a long US dollar, long pound against the yen. The yen strengthened. These are pretty much how the positions were closed at 10 p.m. by the broker, you know, for the day's P&L. So there was a 37 loss there, 84 loss there. Now the 84 loss was as a result of me taking a long position here on the pound. Now I'd taken a long position there on the pound, and what I did was I moved my stop to 200 pips. So it's all the way down to 139.34. It's right about there. 139.34 from 141.34. And as the market came down, I thought, well, my word, is this market going to retrace 100% of the move and stop me out? So I decided, I also took another pound yen position at 156. It was 159, somewhere around there, in the 150s, for a long. And as the market came all the way back down, I decided to just manually close the position. And this is obviously, I'm just using a 5-minute chart here, probably better if I show you the 15 minutes. And I close a position on that candle there. As we've seen, the market's come down and pretty much did what I expected it to do and rally all the way back up. So, yep, snatching defeat from the jaws of victory. And so that's what those losses were about there. And a few smaller losses going into the market and closing positions pretty early, like 16 points on the pound yen's a sneeze. There's no reason to close a position. So the US dollar, Japanese yen. Now that position, this position here, was an order I'd left in the system to hedge the initial long position. So this long here was a 10 p.m. close. This was a manually closed one. So that was 47 points right there. So from the market going further down. Now this was a hedged position. This was designed to hedge this position if it had come down, and it would have acted as a hedge like the one I mentioned earlier on the pound yen. Now I manually closed this position, completely forgot about this order being in the system. I was surprised when I saw movement on my P&L to the downside, and I thought, well, I thought I closed all of my closed pretty much. The position I had available was working in my favour. So I had a look and I saw that this position was activated, and I immediately closed it. Now I went on pound RD, and that's worked okay. I went on the pound yen for another long, and this was overnight. These long positions here were taken after I saw the market break out to the upside on the pound yen chart after obviously the interest rate decision. So after seeing that I'd closed a position too early, I then decided that after seeing the breakout that I'll trade a couple of pound pairs to the upside because the market's now moving in the direction I'd wanted it to move. Now what I did was I put on 3 trades, and these 3 trades were obviously the pound Australian dollar, pound CAD, pound yen. Now the reason the pound CAD, the pound yen positions were closed, those were automatically closed based upon my stop loss. Now the pound Australian dollar at one point was a good 100 points in my direction. I moved the stop up, gave it pretty much 50-60 points worth of room to move. The position was closed overnight while I was asleep. During the Asian session, as the market spiked down again, the pound CAD, something similar again, moved down during the Asian session. By the end of the day, I end up with a positive from those trades, so I can't be too upset, because say I decided not to put a stop loss in or a take profit and they would have gone against me, I would not be very happy. So again, I didn't put a limit order in, because if I had put a limit order in, those limits would have been reached, because the market did spike up. So if I had put a 100 points limit on both positions, I'd have won those positions, but I did not. So it is what it is. So those positions were favourable. Woke up, saw the pound yen position positive, decided to close it. Now after seeing that, I saw the pound continue to strengthen. This is obviously, I should have been more risk aware at the time, and this was on the 15th, which is Friday. I had a look on the economic calendars. I saw that Mark Carney was speaking at 1, so I thought, well, no likely would happen is the pound has strengthened a bit. As I said earlier, weaken around when Mark Carney gives his speech, his press conference, whatever. Now at 10:30, Andy Haldane, Deputy Bank of England Governor, gave a speech where he mentioned stimulus and pretty much had very bearish comments which were perceived as being bearish for the pound. Now what actually happened was I had 3 trades on at the time, so pound CAD, pound USD, pound yen. Now you could argue that taking long positions with press conferences several hours away is incredibly risky, especially if it's on one currency pair, and as we know with Brexit and all, there is a certain amount of bearish sentiment around it, even though we do have rallies in the pound from time to time. Now I had the positions open, and they were in profit by quite a bit at the time, actually, to be fair. So let's go look at the pound yen, for example. So if I go to look at the pound yen on the 15th, so, and it was around here. So I got in around there, about 9:30, 9:35, and the market was going up in my favour, and comments came out, 10:30 candle, and I wasn't actually at the desk at the time, and when I saw the position start to go against me, I kind of thought, well, this is strange. I thought it might have just been a pullback for a continuation to the upside, but obviously you look to the left of the chart, you see the market come up, sell off, rallied up a bit, sell off, rallied up. this is, I was looking at a 1 hour chart at the time. Now, on a 15-minute chart, I'd have seen this pin bar and seen the market pretty much rally below this pretty bullish pin bar here to the left, and we like close position, so I didn't close position. I thought the markets were going to reverse course, and as the markets continue to bleed, I lost 200 points, 200 points plus, it was about 200 points, yeah, I'll give it 200 points, on these 3 positions. I then went back into the market, thought it was unusual, so I went back into the market again, using pound pairs, and further exacerbated losses. So there's a further 3 losses on there as well. So yeah, so it's pretty much on this move here. Let's have a look at this. Let's have a look at this position. Let's see how many points were lost. 311 points right there. So 311 points lost on pound positions. Now again, went back in short 92. Could have made 100 there, but I kept the position. See, it was going against me a bit, so I closed the position manually for 92 points. Lost the position there. These are all small positions. Pound yen, again, another favourable position to the short side. Take quite a few shorts. Thing is, I was closing out quite a few positions quite early, so I made a few losses there, which were avoidable. I should have pretty much had more confidence in the because, for example, this position, I had a limit order of, say, 100 points. Now, with the limit order of 100 points, I then see the market was moving favourable. It was accelerating quite a bit in the direction I chose, which is the short side. What I should have done was pretty much keep it at 200 points and let the position run. But looking at a 5-minute chart on the pound USD, let's have a look here. Nope, not the pound odd. Pound USD, here we are. And if I go to the 15-minute chart, and where was I? It was around here. I saw the position. I saw this green candle here, and I thought, well, maybe it'll reverse. So I closed that position, and as we've seen, the market went down even further. So it will reach my 200-point target, but let's see, where would it? Yep, it got to my. Would it have got to my? Oh, matter of fact, it got pretty close. Pretty close. Let's see, 33. Yeah, it got pretty close. It wouldn't have got exactly to the 200-point target, but it would have got pretty close. 150 points easily. Closed that position early, re-entered a few other positions, and this was pretty much these positions right here. Entering and coming out, it's not really a good sign, to be honest, when overall market sentiment is bearish on the actual pound yen, because the yen started to strengthen quite a bit in the evening. Now, I taken a US dollar CAD position. I won that. Well, would you say won? I got 12 points out of that position. It was up to 20, but I closed that position around about here. Again, after seeing this green candle here. And I took it on 12.60, 12.968. I took it around about there. Took it right down there for 12 points. As we see, the market's gone down even further. That's on the US dollar CAD, and that was based on, if I go into the 1 hour chart, seeing the market rally all the way up, nice double bottom down here. I saw this pin bar, could call that pin bar right there, off what's been resistance as a price below it. So I thought, well, the market should go down, which it did. And so this is, let's see, there is. So earlier this week, so I was caught in a breakout there. I was also caught in a breakout on the pound yen. Now the pound yen breakout, I was looking at it on a 5-minute chart, so I saw the markets come all the way down, and I was jumping in and out of the market. That's pretty much the reason why that's the reason why you can see a few losses here in the pound yen, few wins, few losses. Now me jumping in and out of the market meant like losses like this one, which were avoidable. I could have just not taken them, to be honest. But yeah. Now the losses, like I was saying, were avoidable, but one of them, on the other hand, was me caught in a breakout. And the thing is, I was looking on the smaller time frame of a 5 minutes, and so I'll just show you. So it's a 15-minute chart. Go down to the 5 minute. So I was going to breakouts this week. I was going to the euro yen and the pound yen, and both of them broke out to the upside. So yeah, breakouts didn't appear to be my friend at the time. So what I'd done, I'd actually put in actual support, well, trend lines here. So put one in there, put one in there. I saw price contracting. Now last week, price contracted on a euro pound position, and it broke out to the downside. After extending all the way down, it broke out to the downside. So with the bearish sentiment around the market, I expected this to break out to the downside. Now, I had two positions on the pound yen. Now, I had a position which I re-entered at 44, 138.44, and pretty much the price retraced all the way back. And I entered another position at 138.60. Now, as this candle here was forming, I did see some bullish movements on the candle during its formation, but I expected it to just be a retracement for further downside on the actual currency. Now, unfortunately for myself, it was an actual breakout, a change in momentum. Now, the price has broken out, and I've quickly closed the position. I've then watched the as price has moved the market up to 139.70, around about 139.70 position. Now, on the 15-minute chart, I saw this. I couldn't call it a pin bar because of the wick, but I saw this here, and I waited and waited and waited, and at 139.05, so I waited quite a bit. It was like 05, 04, somewhere around here. I decided to take a short. Now the market went down, and I closed the position pretty quickly, when in reality I should have kept the position on. But then again, hindsight is 20/20 after all. So I closed this position because, again, I was at this charts, I was watching price movements, watching the candle formation, and that didn't really help at all, watching the candle formation. But 38.32. I'm just having a look right now for the short positions that I closed on the pound yen, because I closed two positions for a loss. 138.65, 138.80, 22.50, and 36.70. So these positions. So I was caught in a breakout, and it's pretty much these two positions here. Pretty sure of it. Let's have a look. Let's just get this chart back up. So on the breakout of the 5 minute, and let's see where the candle closed at 138.781. 138.781. Yep. So that's where I was pretty much caught at. Close those positions for 138.80 and 138.83. So the 138.80 is a 36.70 loss, and the 122 minus 22 loss is 138.83. So I closed those positions pretty much after the market spiked up, and so market spiked up, closed those positions out, and the two losses after that was just a result of me getting in and out of the market quickly. Really no need for it. So this week ended down 123 points, which isn't good. So, but the thing is, I looked at it and thought, well, during the week I did remember I was making quite a few points, so I decided to obviously do them by days, and I'll just quickly highlight around this. Put a box around it. So pretty much those were the trades which were favourable, those were the negative trades. So 1,132 points made, but the big problem is 1,317 points lost. So the overall position is obviously a losing one. So it seems to be 2 steps back, 1 step forward, because first week 1 was minus 66, week 2 140, week 3 minus 123. Now, what are the negatives and the positives taken out from this week? Now, positives and negatives. Now, the positives obviously is making over 1,000 points. The negatives obviously losing 1,300 points. Now, to be a bit more serious about it, the thing is, this massive loss here of 300 points was pretty much what destroyed this week here. This whole thing here was, and that was taken. Probably not the best idea to take. I should have maintained a short bias on the market. And I should be obviously aware that during the European session, central bankers are awake. They can do impromptu press conferences that I'm not aware of, that may not be on economic calendars. With the Bank of England governor speaking at 1, should be expecting MP Monetary Policy Committee members possibly doing press conferences, not really going to undermine or pretty much give a a forward to what Mark Carney would say, but just being generally aware that central bank figures have the ability during the European session to influence currency moves significantly, and taking long positions was incredibly risky. Taking on 3 positions, well, what can we say about that? It's not very good risk management. Now, also, so caught in the breakouts, I suppose nothing I could do about the breakouts, because the breakout last week was to the downside, so I expected the breakout this week to be further to the downside, and both of them were to the upside. The pound position, again, looking back at it after checking the RSI on the 1 hour time frame, it was heavily oversold, so some sort of retracement was expected. So being caught in that breakout was possibly avoidable. But again, it's one of those things in hindsight, you think you can avoid everything, can't you? So, with this position here, now, letting this position run to minus 187, even though it was hedged, was not necessarily the best move, because if a position moves 187 points based upon how I'm trading, I'm not doing large intra-week swings or long swing trades. 187 points, that should have been closed at pretty much 100 points. Again, down here, closing this position was probably symptomatic of seeing a large possible, not getting a larger loss than the one there. So again, says more about my psychology than anything else. This pound yen position, this was getting in too early after the interest rate decision, not waiting for further retracement and stronger confirmation of a further trend to the upside. So I didn't wait for the confirmation to the upside. I pretty much jumped in the market, said the pound's going to strengthen, the pound's going to strengthen, the pound's going to strengthen. Extended and moved my stop, something I should not do. And after that, adding to the position, and again, then closing the position, so only to watch them go in my favour. Now, if I pretty much stick to a pretty firm idea of where my stops are going to be, and pretty much let the trades play out, then that would be a better approach to take. How I started the week, again, is concern. Large losses at the start of the week there, and so let's see what happened in the previous week. Which is, that's week 1. So let's have a look at week 2. Week 2, I only did the 1 trade, so, and that was a loss to the start of that week as well. So it's definitely something to look at going forward. How I approach this week. I'll be testing more strategies, of course. This, over the past 3 weeks, this is where my overall points is. As you can see, pretty much just say 50 points down over the past 3 weeks. So, not breaking even, suffering pretty much a small loss overall. So it is concerning somewhat that I have not managed to finish. I've not managed to have a positive or even break even after 3 weeks. But this week, again, I'm looking at some strategies. As I mentioned, I hate to repeat myself, but we'll be looking at strategies, and definitely quite a few of them look positive from some of the back testing I've done. They look positive. It's a case of obviously seeing how they perform in actual market conditions, again, because in testing everything looks okay, maybe fine, but then again it might come down to my own psychology, because at the end of the day, it seems like trading the Asian session, setting the trades, going to sleep, waking up, and the trades either are successful or they're not, and I'm not actively there micromanaging the trades. The trades seem to work out better in that sense when I'm pretty much just letting the trades develop how they should. It seems like actively managing trades, I seem to be letting losers run, and which isn't a good thing. It's not a good thing at all, because a lot of them were avoidable, quite a few of them actually, because this trade here was pretty much as a result of getting into the market too early after the interest rate decision, and pretty much securing a pretty good loss. And again, there were a few pretty big losses which were avoidable at the end of the day, like especially these here, like these two in particular, 70 and 78, those were avoidable. And that's definitely something to look at. Obviously I don't want it to be like, but then again, I was about to say, I don't want it to be like last week, where pretty much opened quite a few positions, closed them quite quickly, and but at the end of the day, I opened quite a few positions, closed them quite quickly, But if you look at it, the week was positive. So the week was positive by opening and closing positions quickly. The week was positive overall. So by simply cutting the losers short, and okay, I did seem like I was being a bit fidgety. I seemed like I was micromanaging the positions, but at the end of the day, as the saying goes, the proof's in the pudding. I think it's the proof's in the pudding or whatever. But as we've seen, by closing those positions that weren't working quickly, I ended up with a positive balance. Whereas this week, I managed to make even more points than last week, but I ended up making bigger losers by not cutting them quicker. And yeah, I've ended up with a negative points balance. So I think I'm going to have to take the lessons from last week and definitely take the learning from this week and see what next week, well, it's Sunday now, so let's see what this next trading sessions will bring.